How is everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to talk about what do customers really want from their bank? What do they really want from their financial institution? And I saw a great blog post coming from PCBB. And I wanted to bring this in as I have shared with everybody in numerous episodes now. PCBB has a daily newsletter that they email out, which is called the BID Daily Newsletter. And this particular blog post was called "What Do Small Businesses Really Want from Their Financial Institution?" And what they looked at here was a survey from a company called BAI, which basically they surveyed 600 small business owners to find out their banking preferences and what they want most from their financial institutions. And then they take these insights to heart to attract and retain more customers. So we're going to look at a couple different categories here. We're going to look at primacy. We're going to talk about switching institutions, channel preferences, branch proximity, individual digital capabilities, and then finally generative AI. And basically, break down kind of each one of these things. What are they looking for here? So this basically says in here, taking customer feedback to heart and being willing to go back to the drawing board can actually make or break an organization's success. Of course, community financial institutions are already pros at listening to their customers, but how do they get to know what their potential customers are looking for? So BAI surveyed 600 small business owners to learn about their banking preferences. Their responses can help you refine your strategy to attract more small business customers effectively. You can also use these insights to deepen your relationships with your existing customers by offering more of the types of products, services, and digital tools they really want to see. So primacy. So basically, a sizable majority, 86% of small business owners use the same financial institution for both their business needs and their personal needs, according to the survey. So in fact, 71% of those business owners actually establish their personal banking relationship first and then build toward a business relationship. It's difficult for many financial institutions to bridge the gap between personal and business banking, but it's an important point because that personal relationship usually begins first. The trend of blurring the lines of personal banking and commercial banking is likely to increase as more people start nano businesses in their homes, preferring to work remotely, particularly millennials and Gen Zers or random YouTubers. I don't know what crazy person would do that. I don't know. Take the example of more and more young people making a niche for themselves as social media influencers. Some of them, like YouTube's enormously successful Kara and Nate, have branched out into multiple business ventures. If anybody has not checked out Kara and Nate, I've actually watched them a few times. My wife actually turned me on to them. Nate does some pretty crazy things in terms of like his athletic attributes and prowesses. So he likes to go on 100-mile triathlons and things like that. So you can kind of check that out. So, but this is a moment in time for financial institutions because these are very small nano businesses that grow up and become bigger ones. They'll increasingly need cash flow management and other treasury management solutions, including access to faster payments and even wealth management. Yes, this is true. But I think go back to the original kind of the original part here, and that is trying to capture both sides of the relationship, trying to get the personal and the business. So whichever one comes in first, if the personal comes in first, you have to try to find a way to capture that business side of the equation, and vice versa. If the business comes in first, then you try to capture the personal side of it. And sometimes those things just take time. Sometimes you got to work with the customer, that you got to build that relationship, get them comfortable, and as you attempt to cross-sell them and bring them in with different things. But I think one of the best things you can do is just, give the customer some space sometimes, just share with them, say, hey, listen, this is what we have, this is what we can do for you. And just, back off and let them, give them a little bit of space, give them a little bit of air. And you might be surprised in 6 months or in a year or 2 years, they might come back to you and say, hey, you know what? I finally did this. I finally started this little, as they say here, a nano business or whatever, small business in the area. And now I need some accounts and some other things to help with that, merchant services, whatever the case may be. So, but Undoubtedly, this is always a challenge, and as the survey said, the majority of people basically start in at a bank with the personal side and the personal relationship, and then move to a business relationship. So okay, switching institutions. So should I stay or should I go? The age-old question. Roughly half of small business owners will remain at their primary institution for the next 6 months, while the other half are at least thinking about a change. Riddle says. So, what would prompt them? What would prompt them to switch institutions? Lower fees top the list, followed by the ability to earn higher interest rates on account balances. Whether the new institution has a positive institutional reputation and the ability to get personalized support for business operations. Now, fees being at the top of the list. So let's talk about fees for a second. Now, if you are an individual banking at the bank, I don't really see unless you're like, I don't know, overdrafting your account or bouncing checks all the time. I don't really see how you would really incur a whole lot of fees from the bank. But on the business side, for small business owners, that's a much different story, because now if you're using a remote check scanner, if you've got merchant services, if you've got like what's called an analyzed checking account, maybe you might be using some of their fraud features, like something like positive pay, to try to prevent fraud against your account, depending on how big your company is or what your needs may be. And of course, all those things cost money. You're paying the bank fees for those services. So that, and those things can really add up. And obviously, if you have a bank that's willing to give you those same services at a lower cost, then yeah, and maybe it may be worth looking into. There's also the consideration for, what if a bank doesn't offer those things, and you feel like you really need them? Well, then that might be another reason to try to switch banks, but, and we're going to see here in a second, customer service is so critical. It's not always about the type of products you have or how low the fee is on those products. Customer service is a huge thing. So now let's look at, but I think, but like I said, one more thing on this though, is that it's interesting that the switch, why people would consider switching, and I would just say, for the age old adage in banking is that it is far more expensive to acquire a new customer than to keep an existing one. So I think most banks out there will go out of their way to keep existing customers, because it's far cheaper to keep them than to go procure new ones. So just a little thing to understand there. So channel preferences. So by 2027, which channels would small business owners likely use the most? Surprisingly, it's not unanimous. Just over half, 52% of those responding to the survey said digital and self-service channels. According to BAI Research Director Jason Mancias, there's a shift that is drawing more small businesses to human-assisted channels. Indeed, small business owners, particularly those in younger generations, prefer to seek advice in branches about budget forecasting, cash flow management, and other issues critical to getting their businesses off and running. However, to better compete for these customers, FIs need to improve their 360-degree view of all of the customers' activities, both in their personal lives and the day-to-day business dealings. I don't know. I'm kind of torn on this one a little bit, because I think that, I think there are a certain amount of customers that would like to see some of these things. Just my personal thought, just my 2 cents on it. I don't think some of these things have really matured enough to the point where they really are working to a degree that, like, in other words, people may want these things, but, like, in other words, working with chatbots. I've worked with a number of chatbots. Most of them I hate. Most of them I can't stand. I don't think they really work all that great. And I think they can be really annoying. And the problem is, let's face it, most companies want this technology and they want it to work because it means they can hire less people to do the same work. Okay, let's just be honest. They want to hire less people to do the same amount of work, and if they can force you to use a chatbot instead of talking to a real person, that's better for them. That means better margins, less cost for them. So there is, again, a part of this is a little bit of a marketing ploy, a marketing blitz. Oh yeah, use the chatbot. So like I said, again, this is why it's not unanimous. Now, Do I think some of these things can improve over time, and it might, it might further shift in the future? Yeah, absolutely. By 2027, I don't know. 2030, maybe 2035. Yeah, this is an important one. Branch proximity. Large majorities of small business owners of all sizes want a branch close to them, much more so than consumers. This is often due to the nature of how businesses tend to process checks and cash far more than consumers. They need easy access to a branch so they can transport the funds quickly and get them deposited so they can use those funds for business operations. Yes, exactly. And people found out during COVID, you needed a PPP loan. The small community banks did far better with this. And I think they treated their customers far better in that instance. And I think people that experienced that learned a very valuable lesson, because community banks did something that was huge. They answered the phone. Okay. If you had to go down there, I know I lived this myself personally. I can say this, that, I took many phone calls from distressed customers who, had family members or people dealing with other large banks, could never get anybody on the phone. All they had was an email address or a portal or whatever that basically felt like they went to a black hole. A lot of times they would submit information and wouldn't hear anything for a month, 6 months, 2 months. It was a very frustrating process. And I think community banks did a fantastic job of being there for their customers, answering the phone, talking to people, just letting people know, hey, look, we're working on it. It's okay, but we've got all your stuff and we're going. And it's just an important point that, technology is great until something goes wrong. And then when it goes wrong, you need to be able to get somebody on the phone. You need to be able to talk to somebody that can help you. And that's why, branch proximity is so important. And it's so important for small business customers to be able to actually get in touch with their bank and get good service from their bank. It's a two-sided coin. The bank's got to provide the service, and they got to be convenient for the small customer. And like I said, the things I stated are why they need to be convenient. Okay, now improving digital capabilities. While the overwhelming majority, 81 to 91% of new online account openings are completed by small business customers who have an existing relationship with the bank, sizable percentages, 16 to 20% of small business customers responded that they started to open an account online but had difficulties completing the process. Half of those respondents had to go into a branch to get their identities verified, while the other half just abandoned the online process due to technical glitches or being frustrated that the FI couldn't verify their identity online. Now, younger generations can't understand why they can't scan their picture and have their bank compared automatically with identity verification databases, like they do with Facebook, WhatsApp, and TikTok. The technology is there. Is it? Banks just need to streamline it and make it an end-to-end solution. That sounds great. Ain't going to happen anytime soon. Here's the things with that. First of all, banks have Facebook, WhatsApp, TikTok, these companies aren't regulated. I mean, barely at all, hardly any regulation. Banks are way over-regulated. We have to deal with things like BSA, Bank Secrecy Act, AML, anti-money laundering. We have the Patriot Act to comply with. You have to make sure you have to check with OFAC, the OFAC list. You got to make sure that you're not, again, opening accounts for terrorists. You got to make sure that people have the proper documentation. When you open up a bank account, you have to provide a lot of documentation. You have to get a copy of your driver's license. You have to provide social security number, date of birth, address. You have to verify that you live at the address. We have to, you provide phone numbers. We have to verify the phone numbers work. There is a ton of things that go into opening a bank account. And then you have things you have to follow, like CIP, KYC, EDD. I could go on and on with the acronyms, but there is so much you have to follow. And here's the problem. Many of the banks that have tried doing online banking have found that the vast majority of accounts that they open or get opened are fraud. They're fraudulent accounts made by scammers that are just trying to get one over on the bank. And that has led to a lot of the problems that consumers have. So between the regulation and the fraud, it has made it very difficult to do this. Banks would love to do this. They would love to provide this. They would love to make this easy for customers to do this. But there is a lot of hurdles that need to get over. And so I just hope that people truly understand that. So, um, yeah, and then there's also, I think there's also another question there that we don't have time to cover, but what are they doing with your information? I think that's another big thing to think about. Banks we have to protect your information. We're not, most of the time, because I can't speak for every bank out there, banks aren't selling your money to marketeers. They're not selling them to third parties. Okay. If you don't think that Facebook and TikTok and WhatsApp, if you don't think they're selling all your data and information to somebody else, yeah, you're living in a fantasy world. Okay. Survey respondents ranked the top 10 ways FI could improve digitally. Number one, 24/7 customer service, very expensive. Faster payments, okay. Quicker money transfers, clear, easy to use app, particularly for check deposit and bill pay. Go from channel to channel without re-verification. Texting to a live person. Ability to turn on and off debit card and credit card. Better product and service recommendations, account aggregation, and online account opening. So we talked about the online account opening. 24/7 customer service, unless you want to talk to somebody overseas all the time, very expensive to do that here in the US. I don't know if that is a practical thing. Faster payments. So you have Zelle, right? Like the Zelle network, and that's owned by a bunch of the big banks in the country. For small community banks to join Zelle, it's not cheap. It's very expensive. And, and I think that, Zelle could, they could make it cheaper for banks to work through the network. But they're also dealing with their own problems right now. They've got a ton of fraud. Venmo and Zelle, Venmo being PayPal, deal with a massive amount of fraud on their platform, and the regulators and politicians are starting to take notice of that, and they're starting to, kind of hit down on that. So, quicker money transfer, that kind of falls in with the payment thing. Clear, easy to use application for check deposit and bill pay. Yes, absolutely. Banks could definitely continue to work on that, try to make that better. Go to channel without re-verification. Yeah, that's a tough one. That gets into security again. Texting to a live person, that kind of gets back to the 24/7 customer service thing. I think you could do it maybe during regular business hours, but could you do it 24/7? Maybe not. Ability to turn off and on debit cards and credit cards. So you should already have that function. I think most banks already provide that function through their app. Better product and service recommendations. Okay. But, is the bank QVC? Is the bank Amazon? I don't really think that's necessarily their function. I think there are certain products. I mean, whether it's financial services products, they could probably make better recommendations on, or kind of put out when you should or shouldn't be thinking about certain things. Account aggregation, again, that gets to be a little dicey, because I think of like Intuit, Mint, some of the other things that are out there for account aggregation, and that, like I said, that can get into like its own kind of security issue. And then it kind of wraps up here with generative AI. BAI also asked about the use of generative AI. More business owners are becoming increasingly comfortable receiving advice about financial products via AI. Really? Are they? I don't know about that. Generative AI can also be leveraged to provide 24/7 customer service. Okay, fair enough. If you want to work through chatbots and other things like that. But I think at the end of the day here, there are a lot of good things on this list. There are a lot of things to talk about. I think that consumers just have to understand that some of these things, while you want them and the bank may want to provide them, it could be very difficult and very expensive for that to happen, depending on, like I said, regulations based on fraud, based on cost. All of these different things play into this. But I think that this was great to look at this and to look at this survey and to understand like where are small business customers coming from? What are they thinking in terms of their channel preference and in terms of needing a branch close by, in terms of when they may or may not want to switch banks. improving the digital capabilities and running through a number of those things. The fact that, some more small business owners out there are, in fact, opening a little bit more up into generative AI. And I think that that will be the case going forward. I mean, I think 5 years from now, 10 years from now, things will look a lot different than they do today. But like I said, I think this was a great exercise. Hopefully people picked up and maybe learned a little bit through this. I think that maybe the first time, if you watch this video all the way through to the end, you might learn a couple of things as to why, maybe from a banker's point of view, as to why banks may or may not want to do certain things. So hopefully this was a little informative for you out there, who, depending on who's watching this. But like I said, so that's all I got with this one. I thought, like I said, great exercise. Saw a lot here, and hopefully banks can work on making some of these things a reality and a great experience for customers in the hopefully not too distant future, but we shall see what happens. So, but if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember, we are on YouTube, Rumble, and all major podcast platforms. Please leave your comments down below. Check out some of the other episodes that I have out there on the channel, and I will see everyone again real soon. Thanks a lot.